skill to learn trading, someone who wants passive income, someone who is not doing anything and is looking for financial stability. So you can share the link with them. This is Forex Clinic. We meet every day, Monday to Friday, 9 a.m. West African time, and we teach people, we give ideas on how to trade. So even if you don't know how to trade, you are welcome. If you have been trading and you are not yet consistent, you are also welcome. If you also want to sharpen your trading edge, you want to get more, you want to fine-tune your edge, not just information, not just knowledge. Because what is more important is having an edge, not just knowledge. So if you are also in that category, you're also welcome. It's going to be an interesting journey for a very long time. So we meet once again Monday to Friday every 9 a.m. So today, what are we looking at? One of the challenges of traders, most people who have been trading for years, who are not consistently making profits, it's not the lack of knowledge about how to trade. They already have the basic knowledge. They know in trading, you buy when price is low, you sell when price is high. They know that. Many of them have learned the use of many of these tools. Fibonacci retracement, moving average, exponential moving average, simple moving average, Bollinger Band, MACD, RSI, and many of them. There are thousands of indicators, and many people have taken time to learn these things, but yet they are not yet profitable. And the reason is because they have not been able to catch the edge of their entry. There are some basic, simple fundamentals that you need to understand to be able to know where to enter a trade precisely. And one of the things you must also understand is the kind of trader you are will also determine your entry point. Entry levels for scalpers and day trader, intraday trader, is not the same as entry level for swing traders and position traders. Because if you are a swing trader or position trader, you are going to be finding your entry at the higher time frame. Whereas if you are a scalper or a day trader, your entry level has to be at the lower time frame. So it's not the same. Because within a higher time frame, a bigger time frame, are so many biases, impulsive movements on the lower time frame. And what do I mean by that? Let's say, for example, you are looking at 4 hours charts, and then the 4 hours chart is showing you that the price, the market is ranging, is on a sideway. If we switch to a lower time frame, you will see trend. If you switch to 5 minutes, it won't be ranging. You will see short-term bullish trend, short-term bearish trend within the range. Do you understand what I'm saying? Let me give more explanation to that. Let's say this is 4 hours. All right? And then you are seeing something like this. This is sideways market movement. When you switch to a lower time frame like 5 minutes, you will see something like this. Now, what you are seeing here is called, this is a bullish market movement. This is a bearish market movement. These are tradables. They are tradables. But on the higher time frame, this is not tradable. Does that make sense to anybody? So that is why the type of trader you are will determine your entry, your decision, your bias, and what you are doing at the moment. And like I said, for every beginner or every retail trader, you need to start from first being a scalper or a day trader. Then when you have built enough capital base, then you can now diversify even in trading. Yes, do you know you can diversify even in trading? In trading, you will diversify by becoming a position trader to some assets. You hold some assets, you leave it for a long time. And then you continue your daily scalping and day trading. You understand what I'm trying to say? So let's say you now have an asset of $500,000. You've grown to that level. You can decide to say, okay, $200,000 position trading. I'll just look for gold at a particular price. When price is low, then I can buy and hold for a long time, maybe for 2-3 months. I saw an account 2 years ago. Okay, yes, I left Dubai 2 years ago. 2 years ago, I saw an account that was held for 1 year, and the profit on that account is over $1 million. Over $1 million, the profit. And the account was still running. It has not been closed. The person was holding the account since 2023. Now you can imagine that within that trade, there have been so many ups and downs. There will be days where his money will go up, and then his money will go down, and then return back up. But as long as the trade, the price of that asset keeps going high, despite the pullbacks, it keeps going high, making higher high, the money keeps going up. Do we get it to that point? So the challenge with many traders is how to enter the markets and be able to come out with profits. So this is what I'll be spending so many days and time explaining. There are different approaches, but there are some basic fundamentals that you have to consider. So many approaches. And one of the edge that you need is what I call finding your confluence. There's what they call confluence. Because there are so many approaches to it, but you need a confluence. And what is that confluence? In a layman explanation. The confluence is having 2 or more criteria, 2 or more indicators giving you a confidence or a bias to execute trade. That means you are having more than 2 or more confirmations. Do we understand? You are having more than 2 confirmations before you execute a trade. So now, how do you now start bringing out those confirmations? How do you come to that edge? Remember that you are not supposed to trade against the direction bias. That's the first thing. You are not supposed to trade against the direction bias. Even if it is on 1 minute and the market is bearish, don't buy. Do you understand that? You know, the rule is you look for buy when the market is bullish. You look for sell when the market is bearish. So even if you are on 1 minute time frame and the market is bullish, don't sell. Let me give more light. Let's say you are opening 1 hour chart. 1 hour is telling you bullish. That means you are looking for what? No, buy. Yes. Bullish, you look for buy. Bullish, you look for buy. Bullish, you look for buy. You now move to your execution time frame, which is the microstructure. For those who don't know what is microstructure, the microstructure is the time frame where you find your entry, and it is always the lower time frame compared to your anchor time frame, which is the higher time frame. You check your direction bias on the higher time frame. It could be 4 hours, it could be 1 hour, it could be 15 minutes, it could be 30 minutes for your anchor time frame. And then for your execution, you go to microstructure, which is the lower time frame, to find your entry. So back to my explanation. If you have gone to your higher time frame, your anchor time frame, to look for buyers, and then the time frame is telling you buy, it's showing you a bullish market structure. If you go to your microstructure, if it is telling you the bias is a bearish bias, you should not buy. Does that make sense? Does it make sense? Let me explain that further. Please, where's our cleaner? So if you're online, remember to share the link. Remember to share the link with your friends, your loved ones who will be interested in this. That's what I'm doing too. I'm sharing with all my friends and loved ones who are looking for an opportunity to learn new skill. So this is an opportunity for them. We do this every day because we want everybody around us to. Religious person, maybe a cleric, a pastor, you should consider trading. Why? Because trading gives you the opportunity to steal. So everybody should trade, both old and young. And he's been trading for decades. He's still trading till now. He has retired from trading, but he's still trading. So he's just doing it now for fun. So let's go on. And this is what I was trying to explain. Your anchor time frame is telling you bullish. Now you are looking out for a buy. All right. When price is bullish, when the asset is bullish, you should be buying. Then microstructure. Which is lower time frame. Higher time frame. Now, what I'm trying to explain is on the microstructure, if price is descending, no trade. Don't buy. What I'm teaching today is about direction bias. Direction bias. Never trade against the direction. This is where many traders fail, including those who have been trading for many years. This is where the error comes in. They understand structure. They understand the charts. They can interpret charts. They can interpret price and all of those things. But they make mistake at this point Never trade against the direction of the market. And don't get confused. It is possible to see this happening on a lower time frame while you see this happening on a higher time frame. Do you understand? Why? Because on a 1 hour candlestick, on a 1 hour candlestick, 5 divided by 60, 12. There are 12 5-minute candlestick that will form. So you will see 12 candlestick on 5 minutes, 1 hour. Do you understand? So that means when you see this green candlestick like this, you will see 12 red and green or 12 green, but you will see more green because it's green. There will be few red inside. So while it's doing green, 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 it can do red, 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 green, green, green. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Is it making sense? Is it making sense? So don't get confused that how come I will see a bullish trend on a higher time frame and then see a bearish trend on a lower time frame. It's possible. When it is pulling back, when you are supposed to be waiting for you to enter, it will be doing a bearish trend. Lower high, lower low, lower high, lower low on a lower time frame. Now, when it is doing lower high, lower low on a lower time frame, you are not supposed to enter. Because by entering that trade for a buy, you are already trading against the trend, the direction. Does it make sense? Let's go to a live chat and let's see something practical. While I was in church yesterday and I was coming home in the morning, I was driving out of the car park. So there was somebody who was crossing the road. I had to wait for him so that he could pass. And while he was crossing, he said, "You are Mr. Samuel." I don't know him. I said, "Yes." So I was shocked. So my mind just said, maybe he's probably from Forex Clinic. I just thought. So if you're online and you are the person who greeted me yesterday, yes, thank you so much. If it's on this platform we met, you are fully welcome. Okay, so let's look at the chart. Now, for using gold doesn't mean that what we are discussing only applies to gold. No, it applies to all the assets. I don't just want us to be jumping from asset to assets. All right? Everything applies. It's the same. It's the same approach. It's the same approach. So now let's look at something here. Let's look at a trend. Now look at this space. Let's look at this space from here to here. We see that bearish trend from here to here. Now, on 1 hour, you see the bearish trend. Price coming down, pull back up, then came down, pull back up, then came down. Let's look at 5 minutes on that same. Now, look at what happened on 5 minutes. Look at the activity on 5 minutes. Now, can the camera see the screen? You know, on the higher time frame, it was a downtrend. It will pull back and then go further down. But look at somewhere here. You know, when the price collapsed, we are waiting for price to pull back, and then we look for our further sell. But look at what price was doing here. It was doing minor bullish direction movement. Higher high, higher low, higher high, higher low, higher high, higher low, then higher high. You know, on the 1 hour, it's saying sell because it was coming down. But here, it's already buying because it's doing higher high, higher low. It's swinging high and swinging up. So the rule is never sell until the microstructure also cooperates with the higher time frame. Until they start doing the same thing. So the moment the lower time frame switch to doing what we saw on anchor time frame, that's where we enter. So by so doing, you have entered the market earlier. You won't be buying late. You'll be entering earlier. That's one of the ways, one way, or the first move you need to make. The first calculation you need to make. Do you understand, Emmanuel? Are you sure? Because it seems you are in another realm. You are switching between realms. So that is the first thing you need to consider, that your anchor time frame, your microstructure must be in what? In alignment. So as it's going up here, no sell, no sell, no sell. Sell is somewhere here. The moment it broke this higher low, now that is one sign. The second sign is, because I said you need what we call confluence. So when you see this, you are already preparing your gun, loading your gun to catch the market. But you need to add some other confirmations to it. Because the rule is you are not supposed to trade just by one sign. You must have other follow-up signs. Do we understand? You need other follow-up signs to show you that it is time to enter. So another sign is the use of the moving average. The use of the moving average. Remember, I told you that when price is below your moving average, the bias is bearish. It's a sell. Do we understand? Can we remember that? When price is above your moving average, the bias is bullish. Price want to increase. When price is trading below the moving average, it means the sellers are in control. But when price is crossing between the moving average, moving in between the moving average, it means market is ranging, correct? I love that. It means we are really following. If it's moving in between. Now, if you look at the chart, you are seeing 4 moving averages. You can just use one. This is where everybody's unique trading ability comes in, your trading edge. You can decide to use 50 only. You can decide to use 20 only. You can decide to use 100. You can decide to use 200. Yes, sir. Well, there is no best to use. However, the longer the days, the better the edge. It also has advantages and disadvantages. For example, if you are using 20, 20 moves faster. It moves quicker, so it can give you fake movements. 50 is a bit steady. However, it can also give you late movements. This is why personally, I plug in the entire form. In fact, some people go as far as using 500. And all these moving averages are they work when they want to work. Sometimes when you are trading and you suddenly see price bounce from a particular area and you are asking question, there is no reason for this price to bounce. There is a reason, only that you are not seeing it. One day I was trading, so I have 500 on one chart on my phone. There is one account that I have 500 moving average. There's another account I don't have 500. So I just saw that price bounced. I was using the one that does not have 500. I saw that price bounced and started reversing. This place, there is no rejection, nothing. Why would price get here and start reversing? Lo and behold, when I opened the second phone, as I was checking through the time frame, I just saw that price used the 500 moving average as support. So don't let any of these things confuse you. All you just need is to have your hedge. The money is there. Get what you can and leave. Go in again, get what you can and leave. I believe that before the end of this year, 3 or more from you guys will already be doing 5 figures. Yes. So, the second thing is the moving average. The moment you see first signal, structure has changed, then look out for the moving average. Where is the moving average right now? Where is price against the moving average? Is price below it? If yes, then it is time. Now, apart from the moving average, you can also use some other tools like the RSI, Relative Strength Index. I don't use it, but you can use it, at least as a beginner. If we plug out RSI here, RSI will tell us on the microstructure that price has been overbought. Do you understand what I'm saying? RSI will tell us overbought. Please open RSI. First, maybe you close one of them. I've forgotten that I'm the one in charge. So we have another indicator called RSI, Relative Strength Index. And I'm going to show us how it works. Now, RSI has a reading here. Look at where I am. That line there is 70. Are we looking up? Then it has 30 here. Once price is going towards the 70, it's telling us that the market is overbought. When price is going towards the 30, it's telling us that the price is oversold. So when it is oversold, how RSI interprets it is that when it is oversold, don't sell further. Do you understand? When it is oversold, don't sell. When it is overbought, don't buy. These indicators, many of them, like I said to you, I have to be honest with you, they are lagging. That means they are telling you what has already happened. But if you know how to use them effectively, they still work. Now, let us look at, look at it. Let us, I told you, let us look at what we are considering. We are considering this side. Look at it here. This is it here. Let me bring out cross. Okay, now look at that area. Can you see? See. It has even crossed above 70. It's telling you on overbought. Over. On microstructure, that is where you want to make your entry from. For years, these things troubled me. This thing confused me. Because if I go to higher time frame, it will not be saying this thing. On higher time frame, it will still be saying oversold. But on lower time frame, it's now saying overbought. For years, these things confused me. And that was why I wasn't using them. In fact, it almost discouraged me from trading. It was later on I discovered that these things are interpreting the market based on the time frame you are working on. Because it is possible for a trader to be looking for a trade on 1 hour. Not everybody will be looking for a trade on 1 hour. It's possible for another trader to be looking for a trade on 4 hours. Position traders will be looking for a trade on 4 hours, 1 day. So they will be using, and if they are using RSI, they are using RSI to consider whether price has been oversold or overbought. So when you see RSI at this level, it's already telling you that it is time to begin to look for sell. Correct? You are following. Because now it's logic. Something has been overbought. That means it has reached its elasticity. In economics, do we remember that? Even though I failed economics, I can't forget that one. That when something gets to its elasticity, OJ, what will happen to it? Exactly, it will burst. When something gets to its elastic limits, it has been stretched and it has got, rubber. When you stretch rubber to a point and it gets to the end of its elasticity, it will break. That's what usually happens. That is why RSI is effective. But as you begin to trade, as you begin to master trading, you might not need it again because you already be knowing. I didn't show you RSI when I said that from here it will be overbought. At the moment we open RSI, we saw it. So as you trade, as you begin to practice more, back test and trade, you will begin to know many of these things. So those who are not using moving average, they can just use RSI with that change of structure. And then they are looking for their sell. So it's overbought. Now let me begin to look for sell. And then they will have to eat that the moment the RSI, the blue or purple line or violet, whichever color you want to call it, it's looking like blue, it's looking like purple, it's looking like violet or lilac. What is the correct color? Are you sure? So some will now say, I will enter the trade once it crosses the yellow line. Some will just have their hedge to work for them. Are you following? Don't worry, you will get it along the line. One thing I've learned is that people don't learn at the same pace. There is something that will become the edge for you. There's something that will become the edge for you, and then you connect. So that's another sign Now, we are talking about confluence. This is how to use your confluence using 2 or more indicators to get your confirmation before you enter. Let me bring one more. Apart from this, is what they call VWAP. That's another one I use. Volume weighted average price, VWAP. And there are people who will trade this. For example, those who trade ICT, SMC, they don't use these indicators. They just do pure price action. So whichever way, all of them will be taught here. Everything will be taught. Whichever way works for you. However, let me quickly tell you, once you learn all of these things, you can't be jumping from one setup to another setup. It will confuse you. You have to master 1 or 2 and stick with it. They all work. They are all saying the same thing. They are all saying the same thing. Is approach that is different. Now, don't forget, we started by saying always trade in the direction of the market. Always. Never enter a trade counter trading by trading against the market. Never trade against the market. In fact, if you follow just this simple rule to the market before you trade, I'm telling you, you'll be making profits. Just by, in fact, even when you are buying at higher high, which is wrong. But if you are following the trend, you will still make money. Only the market will first pull against you for some time before you come back to your entry. As long as you are a friend with the trend, you make money. So write it down. Become the friend of the trend. Don't be an enemy of the trend. Become the friend of the trend. So let me bring that another one that can be commonly used. VWAP. This one is very uncommon. Institution traders use it. In fact, most traders don't know about VWAP. Most traders don't know about VWAP. Very effective. Very, very effective. Those who trade ICT, who use order block, and then they always find supply zone and demand zone. VWAP will always give you the location of where your supply and demand zone is. So instead of getting confused about how to find your demand zone or your supply zone, just plug in VWAP. VWAP will tell you the location. VWAP will give you the location. So now, look at the chart. Don't mind all the green surrounding it. Let me remove those ones. The main thing is the blue line. So we remove the upper band and the lower band. We just stick with the... Now, this VWAP, what it does is that every day, one market end, it ends. It doesn't factor in what happened yesterday into today's market. It gives you the average price of today. In fact, it does session by session. London session, New York session, Asian session. Once those sessions end, when market ends, VWAP ends. Now, to use VWAP, VWAP is saying anywhere I am is a location where orders Anywhere I am is the location where order is being accumulated. Are we following now? Anywhere I am is the location where order is being accumulated. And what that means is when price comes back to me and the bias is bullish, the moment price comes back to me, if you enter, you are safer. If you enter a buy, you are safer. If the bias is bearish, the moment price return back to me, if you sell, you are safer. Now, look at the board. This is the viewer. So, remember, this was where we were looking at. You remember now? We were looking at here. Price was going up and we said, here never buy until we see, number one, a shift in structure where it is no longer doing higher high, higher low. And how do you know it's no longer doing higher high, higher low? Yes, quickly. How do you know it's no longer doing higher, it's no longer bullish? Quickly. Samson, yes. When it begins to range, yes, explain the concept. When it violates the trend. Oh, you are still thinking, I know. Explain the concept. When the trend violates, it's no longer honoring that trend. Emmanuel. Yes. So do we understand now? It violates that trend when the new high is no longer higher than the previous high. Don't forget that rule. And then the new low is lower than the previous low. In a bullish trend, the current high is always higher than the previous high. Then the current low is not lower than the previous low. Bullish trend, current low, not lower than the previous low. This is the current low. Current high, higher than the previous high. This is the previous high. As long as it keep repeating this, it is bullish trend. But the moment the new low goes lower than the previous low, it has violated the trend. Then the new high is not higher than the previous high. It has violated bullish trend. No bullish. This rule is very fundamental. It's the rule of trading. It's the rule of the market structure. And look at it here. The new, where is it now? Look at the new high. It didn't ride higher. And then the new low broke lower. In fact, anytime I see this thing in market, I'm always happy. I am always confident that it's going to collapse. If I also see it below, if I see it below like this, I'm always confident that it will go up. Some traders will call it double top or double bottom. Double top or double bottom, it's like this. Or it's like this. Then like this. Or like this. So when you hear double top, double bottom, This is what they are referring to. A violation of the trend. Do we understand? A violation of the trend. So look at it here. Price was far away from the VWAP. You know, on the anchor time frame, we are looking for what? Sell. We are looking for sell. But the rule of VWAP says when price is far away from me, don't sell, don't join until price comes to me. So why price is trying to come to VWAP? It was doing higher, low, higher, low. Then it came. Now, when price came to VWAP only, you are not here to sell because of confluence. We have to see structure shifting. It has come. Rule 1, you note it down. That's why you need to have a trading journal. You need to get a journal that is only for trading, where you mark all of these things. Oh, I'm trading oil today. Okay, on anchor time frame, what am I seeing? On microstructure, what am I seeing? Rule 1, I have seen price come back to VWAP. VWAP is very effective. I tell you, it's one of the tools you should use, even though you are confused about moving average. Just plug in VWAP. But VWAP is not on Meta 5, MT5, Meta quotes. It's not on MT5, it's not on MT4. You can only see it on Trading View. Do you understand? So price has come to VWAP. Okay, I'm waiting for structure to shift. The moment structure shifts, I either enter immediately at this break or I wait for price to still retest. But any of the two coming. Do you know why? Because when we move back to our anchor time frame, it is just about to. It's just about to start selling. In fact, on your 1 hour time frame, it will still look like it's still going up. That is where your entry is. In fact, it will be looking like don't enter yet. Don't enter yet. You see, the moment market is telling you don't enter yet, enter. I'm telling you the truth. The moment market is telling you enter now, don't enter. I'm telling you. 7 out of 10, it will always work. When market say don't enter, it's not yet time. It will go further. Provided you have gotten a confluence, come in, step in. Because there are some traders who are still waiting for more confirmation. Before they wait, you made money. And like I tell you, one of the rules that is helping me right now psychologically is that I'm not afraid to trade. Once you have your setup, you have your confluence, 2 or 3 confirmation, don't be afraid to trade. If I miss it, I won't make the second one. That's the psychology. I believe that 6 out of my 10 trade will work. And if 6 work, it will give me profits. We did the calculation now. Risk-reward ratio. Because whatever I'm risking, I want to get times 3 of it. So if 4 fail, and I get 6 working, and I make times 3 of it, that's 18. 18 minus 4, I have 12 left. So I am not afraid to enter that trade. However, for every trade you are entering, just make sure that you can still do it 10 times. So should in case 1 fail, I can still go the second time. If the second one fail, I can still go the 3rd time. The 3rd one can fail. No, if you are following what we are teaching here, you can't have 3 setup fail back to back. You can't have, and if your first trade works, leave trading for that day. I schedule it. Yeah, if the first trade works and it gives you 3, 4, 5. Leave trade for that day. Don't be like us. who want to get more? And in the process of getting more, you get trapped. One thing I hate is to make money and the market want to take back 1 cent. That cent, I want to defend it. That's where there's problem. In the process of trying to defend that $1, you are already giving it 20 again. And sincerely, I was just talking to myself. I said, my best trader in the night, my best trade so far is always before I wake up. I will wake up to see profit. There was one day on one of our social trading accounts, we had a very terrible drawdown. Very terrible drawdown. Very, very terrible drawdown. We woke up to see recovery and profits. Massive profits. Massive profits while I was sleeping. So I just started thinking, it's like this night trade, I have to take it very seriously. Very, very serious. So before market close, I analyze the market, then I enter. So I wake up around 4. So by the time I'll be waking up, let me see the results. And then in the morning, I rest. I do Forex clinic, read my Bible, continue my Bible reading, attend to other things. Then in the evening, if I see it set up, I pick it, or I leave it in the second day. If the profit is sweet enough, you don't need to enter again. You know money, the way money is. May God deliver us. And the Forex market is there to always tell you that you can make more. So, this is how you find, your question is when to enter. That's how to find your entry. Going back to 1 hour now, you will see that at that point, let me mark that side. Let me mark that side. Our entry will be somewhere here. Some will wait for a retest of that place. But me, I don't wait for that retest. Some, I don't like market to leave me and never come back. So the moment the moment he breaks that pele, he breaks this place. PWAP is already telling me you are covered, you are in the right location. I sell straight away. So if this pullback enter, it still meets me well. It continues. And sometimes it doesn't do this pullback. It goes straight away. And once it goes straight and give me decent profit, I close. I now wait for this retest. If it retest again, I re-enter again. So I will make it 2 times. So that is where our entry is. Now, if you now go to 1 hour, you see that on 1 hour, it might still be telling us to buy. You see it? Look at 1 hour. 1 hour is still telling us, don't sell. Don't sell. Look at it. We are selling around this area where price have just done green. And the last candlestick was a small selling here. Will make many people be afraid because your stop loss will just be here. Look at the gap. Look at the distance. Price can come there. Don't enter yet. Allow this candlestick to finish forming. Look at by the time candlestick is finished forming, you have made profit. Look at the next candlestick. Look at it. Look at that next candlestick. Fire. That's it. See where entry is. You see now, Samson. Sharp entry. This is what they call sniper entry. Sharp. So many traders' problem is this. It was my problem too. It used to be my problem. Until I keep fine-tuning, and then I find my edge. Usually, I will come and trade here. This I will come and enter from. In fact, most of the time it will be here. You see this one that pull back. I will enter here. It will now pull back to this place. I will be afraid. I will think you want to start buying. I will now come out of the trade. It will now start selling. I will now put hand on my head. Why did I come out fast? Because from here to here is wide for stop loss. Do you get it? From here to here is too wide for stop loss. Stop loss should be small, should be tight. Then take profit should be big. I didn't come to the market to come and count number now. I came to make profit. So I should not be there and be joining them to count number. And as a retail trader, you don't need too many candlesticks to make money. Just that sharp movement, that sharp drop. And it gives you 3-4%, you are out. Then you wait for another entry. When I missed this early morning trade, this bull here, it was even fear that made me come out. Around that to 11 to 11 on Friday night, I placed a buy, but it quickly gave me profits. I said, no, this thing that did like this, you're not going to open with a gap on Monday and sell. Then let me close the profit. So as I enter, I gave that profit, I just close it. So when I wanted to re-enter, it didn't allow me to close market. If not, I will have entered here and wake up here. And I gave somebody the signal. One of the people that we met at the event we went for in FOGX. He was asking me that what's the bias for gold. I said bullish. And I said first leg, 50-20. Second leg, where's my phone? I said first leg, 50-20. Sorry, please, what's my password? Okay, I've gotten it. Thank you. Yeah. I say, what's your bias? Bullish. First leg, 50-20. A break above, then we go 50-60. Then all-time high. So in the middle of the night, she chatted me. I was sleeping. I was doing emoji dance on 50-20. That means around that after 1. Price I've got. That means she was awake trading. I just woke up to see her chat. So if I had entered and price as at that now, right, price is at 50-24. I missed it. So what I did was to wait for this pullback. So I just picked small buy. I'm resting now, waiting. Price is ranging now. A break above this, we go higher, 50-60. A break above 50-60, we take it to the all-time high. And that's my current bias. I don't see gold selling again. I don't see it selling again. But I will wait for those conditions to come. Yes. No, it's ranging. That one is just a personal bias based on fundamental, not anything technical. Not anything, because right now, anything technical, right now, gold can equally collapse because it's in the area where it can sell. It's in the area where it can collapse. Do you understand? That area where it is now, it can actually collapse. And I can tell you that many traders are looking forward to sell. In fact, some are already pulling sell right now. Some are already entering sell right now as we speak. But it's ranging now. So once it's finished ranging, you either take the leg up or you take it down. That's why you have to wait. When trade is doing sideways movements, stay sideline. Stand by. Because it can collapse down or go up. Some traders will just be waiting for price to come back here and then they take it down. They will look for a break and then a comeback. It will do, that's what they call liquidity sweep or liquidity grab. It will go and stop people out, take their stop loss, then enter back and then collapse. But me now, my bias is that I'm seeing gold going higher. Yeah, for gold to have reclaimed 5,000, it will buy. And then with activities coming up, Trump announcing that they are going to shut down on the 14th. He made the announcement yesterday. Some of those factors also can influence gold going up. I'm always on the side buy of gold. Almost all the time. I'm always on I like buying gold. Why? Because the general outlook of gold, even when it is selling, is still buy. General outlook. This monthly time frame. So general outlook is always, you can't see gold just descending. It will pull back, absorb liquidity, taking more money, and then because gold is a precious metal. So it's people are investing in it. And the more people invest in it, the more the value increases. People were not trading gold this much 4 or 5 years ago. People were not trading gold this much 4 or 5 years ago. It was just recently. People started trading gold serious. In fact, people were trading S&P more than gold before. People were trading oil more than gold before. Those who were not trading currency pairs, they were trading oil, trading even NASDAQ. I know about Dow Jones before I know about gold. Dow Jones, US 30. So if I'm not trading currency pairs, I'll be trading US 30. It was a friend who came to my house and he said, you people are trading rubbish. That gold gives money. My friend, great man. I said, gold care. And from there, I started getting interest in it. And I saw that gold brings fast money. But it's also... I met someone last week. I met someone last week when we wanted to take our dog for treatment. His gospel's friend. So he was trading, is it GBP USD? I said, why are you not trading gold? He said, gold care. But I now discovered that recently, new traders who are rising are coming to gold. And that's why gold keep appreciating. One of the factors that makes it to appreciate, because the more people trade it, the more it becomes more expensive. Do we understand? So, any other questions so that we can end today's session? We've taken 1 hour, 30 minutes. Yes, sir. Yes, now. Okay, against gold. Yes, but the implication is the spread. The spread is the difference between asking price and bid price. Very dangerous thing, you know. If you are going to trade, that's why if you're online, any broker you want to use, just use the recommended broker. EXNESS. The link is on the chat or the comment section. If you want to start trading demo, you want to sign up with a broker, just click the link and sign up with EXNESS. Very dangerous because broker can frustrate your trade. And one of it is with spread. Now, when you want to trade, you will see something like this. Red and then blue. One is asking price. One is bid. All right. Now, the difference is what they call spread. This spread varies, the amount of this spread varies from broker to broker. How much they will charge you? Yeah, it's like they are charging you. So you have to pay for it. The moment you click on your trade, buy or sell, you have paid for this spread. So this spread is very, very dangerous. If the spread is too wide, it will affect your trade, affect your profits, affect your loss. It can make your loss sink. It will magnify your loss. It can make your profit small, minimize your profit. So the reason why the spread of gold against other currency pairs is wide is because people are not trading it so much. So they have to, it's expensive. That's why the asset with the tightest spread is, anybody apart from gospel, anybody that get this one get 10,000 without googling it. The asset with the tightest spread, 10,000, 10,000, 10,000. You couldn't make research. 10,000, I don't know. 10,000. Going, gone. The asset with the tightest spread. Euro USD, because it is the most traded asset. The most traded asset in Forex trading. In fact, many brokers can give you zero spread. In fact, some brokers can pay you for trading Euro USD. They use it to attract customer. They can pay you and say, we are giving you money back. If you trade Euro USD, we give you money back. Because the spread is almost nothing. Very tight, very small. I mean, I don't like it. I don't like it. I don't just like it for any reason. I don't know why. It's the most traded though. I don't like it. I even prefer to trade GBP USD than trade it. I don't know why. If I go near it, I lose money. Despite the fact that it's the same setup. It's just psychology. I've just have that mindset that I cannot make money from Euro USD. Yeah, the implication is that when you are trading it, you pay less. Yes, commission and all of those things, you pay less. It helps you to maximize your profits. And it helps you minimize your loss. For example, let's say your stop loss is 20 pips. That trade will not close until it gets to exactly 20 pips. But if you are using a wider spread, if your stop loss is in 20 pips, they'll be closing at you 15 pips or 18 pips. So they've cheated you. Yeah. Many traders don't know this. So they believe that let me just trade whatever it is, let me trade. And so provided I'm making money. If you are making money, they are cheating you. You are supposed to have made more. More, I mean much more. But if you are losing, they are even still cheating you more because you have paid more to have acquired those losses. But you won't know. You know, I work with liquidity provider and brokers, so I know I know all this. They do what they call spread mock-up. I can go to a broker now and say, I have a client who want to trade gold. How much can you give me gold as spread? Okay, we'll give you 10 cents. We make it 20 cents. So they will design that trader's platform that whenever he's trading, when he trades gold, he will be paying 20 cents. But he will not know. You will think you are trading the same thing with everybody. No. Yes. They do it mock-up. They call it mock-up. I didn't know, I didn't believe all of this until I started working with a liquidity provider. So you bring client, they will do mock-up for you. They will increase their spread. They do it on their CRM, back-end office. They will increase their spread. So that 10 difference is what they will be paying you. And that's a lot of money if that person is doing volume. The Wednesday is still paying us, I think, $8 per, for those who are on their, what's the biggest? Is it Brilliant partnership? They are paying us $8 per standard lot size. If you go and arrange for mock-up, you can be earning like $30. So when the person click buy on one lot size, $30 comes to you straight. Even more. So that's the end of. Do you understand that? Yeah, because of spread. That's why people avoid some assets, like all those South African ZAR, all those USD ZAR. They avoid it because their spread is wide. Do we learn anything today? So this week, let's open our demo account, everybody, and let's start back testing. Even if we are still not getting anything, don't worry. As time goes on, it will connect. I said before the end of this year, you will be printing five figures. Yeah. In dollars, oh. See what I'm saying, oh. This is what I'm talking about, oh. Indeed, before the end of 2026, we here will be printing more. Do you know what this is in Naira? Or more. Samuel, Alpha. Are you sure you still be telling me yes, sir? Yeah, Samuel. Are you sure you still be giving me tea? Because money used to give people wings, so. Do you know that the PA of some people are PA? The driver of some drivers. May God take us to that level. So maybe you two will not employ somebody. You will employ somebody that will be giving me tea. Somebody said amen. No? You know one pour water for Elijah hand again. All right, so let's go offline. For our line guests, we'll see you again tomorrow, same time, 9 a.m. Okay, so